Welcome to retracements. In this lesson, I want to go over what a retracement is and how you can set them up, and then go through a few examples. I'm using Thinkorswim, and if you come over here to the Drawings tab, you'll be able to see that you have Fibonacci retracements and Fibonacci extensions. For the purpose of this course, Fibonacci extensions are actually called Fibonacci projections. And Fibonacci extensions are just an extension of the Fibonacci retracement tool. And I'll get into that in a second. So let's choose retracements and come and take a look at MET. So we're going to do two retracements here. And the first is going to go from this swing low to swing high. And now we have three retracements. We have the 38.2, we have the 50, and the 61.8. You can see that MetLife peaked out and then retraced all the way back down to its 61.8 at this point. Taking a bigger look at the stock, though, you can see that we had a nice double bottom after the flash crash, going one and then two, and now we've seen a nice big move back up. So in the big hole, looking at this on the whole, MetLife has been making an uptrend. So when we go from the 4-hour chart down to a 1-hour chart, we can see that this was a continuance of the uptrend. It abated for a little bit and then it continued on upward. So this abating, this retracement, is what we're looking for. And if we believe in the trend, there's always going to be some retracement. An upward moving trend is going to have higher highs and higher lows. So you can see here we have a higher high, higher low, higher high, higher low, higher high, higher low. If it's going with the trend, then any downward movement is always going to go back the other way, and we call that a retracement. In this case, what we're looking for is how far the stock is going to retrace, and what would be a good time for the buyers to come in and start buying that stock again. So let's take a look at this case. Here we have our first retracement, which is going from A to B, and then it's retracing to C. In this case, the retracement came all the way back down to the 61.8. Came down first, nice and slowly, and then it broke through everything and came all the way down to the 61.8. Once it hit the 61.8, you can see from the candle, and I'll zoom in, the candle is a very long candle, so there's a lot of downward buying pressure. However, the bulls came in at this point and pushed it all the way back up. So this candle right here, along with the fact that it came down to the 61.8, would be a good signal to get into the trade. From there, the trade went up and up and up, and it peaked out at 51.3. So now let's take a look at where the next retracement could be, because it looks like the stock has turned over and it's going down to make a higher low. So let's go from A to B. And we can see that if the stock is going to come down to at least its 38.2 level, it needs to come down to 49.60 roughly. If it's going to come down to the 50 level, it needs to be 49 and a nickel. And if it's going to come down to the 61.8, it's going to come down to the 48.52. Finding that retracement was pretty simple, wasn't it? Here's another case with MRK. MRK made a big move up, peaked out, and then came right back down to the 61.8, where it bottomed out a few times over a few hours, and then it shot back up to 53.25. Here we can see that with Morgan Stanley pre-earnings, there's a big move up from 30 to 35. And if we go from low to high, we can see that the retracement came up, and then after earnings, there was a huge move down, big shorts coming in, and it came all the way back down to the 61.8. And that's where it found support. Once it found support, it's been consolidating ever since and moving pretty flat. So let's review how you can use retracements. If a stock or an underlying has made a big move up, and then all of a sudden it turns over and starts to come back down again, to give yourself a bit of assurance about how far it could fall, use a retracement. And to do that, we go from A to B, and then it's going to retrace somewhere to C. There's a lot of other retracements, like the 23.6, the 38.2, and the 50 and the 61.8, as well as the 73.6. But for the most part, the only three that you need to use are 38.2, 50, and 61.8. Let's go on to the next lecture, where I'm going to teach you about Fibonacci extensions.